All right, in this video, I'm going to do a short explanation of how balance sheet accounts are affected by depreciation expenses. Now, depreciation expense is an operating expense that is reported on the income statement, but the value of the assets, all right, are reported on the balance sheet. So, and on the balance sheet, assets are recorded at cost, what they originally cost, minus any accumulated depreciation. Accumulated depreciation is the sum of all depreciation expenses taken on the asset. Eventually, if they own the asset long enough, it'll be carried at a zero value on their balance sheet, which means that assets deteriorate over time. Now, the company's buying new assets, but uh, the assets that they're buying cause the balance sheet values to go up. The depreciation that they take on those assets causes it to go down. We'll demonstrate this with a hypothetical, then go look at the real balance sheet for Amazon. So if we assume this robot had a cost of $150,000 and Amazon expects it to have a useful life of 5 years and have $4,000 of salvage value. They're going to sell it for scrap at the end of the 5th year. Then they're going to take depreciation of $146,000 total. And since we're assuming that they're going to do annual straight line depreciation, then that 146,000 per year for 5 years is $29,200 of total annual depreciation expenses. All right, so the original cost of the equipment was $150,000. They bought it at the very beginning of 2020, and at the end of year 2020, they're going to report $29,200 of depreciation expense on their income statement. So after 1 year, they have accumulated $29,200 of depreciation expense. They subtract that from the original cost of the equipment, and the ending book value, the value reported on their balance sheet, would be the net asset value, which is original cost minus accumulated depreciation. All right, so they're going to take depreciation expense at $29,200 each year. The accumulated depreciation after the end of 2021 is $58,400. And so the book value on their balance sheet, the net property and equipment, would be $150,000, the original cost, minus the $58,400 of total depreciation expenses that they have claimed, which we call accumulated depreciation. So the balance sheet value would only be $91,600 at the end of 2021. If I continue that out in year 3, they'll take another $29,000, which that's 3 years worth is $87,600. So the ending book value is $62,400. At the end of year 2023, original cost minus 4 years of depreciation expense, and 4 times 29,200 is 116,800. That's the accumulated depreciation. And so the ending book value is 33,200. And in the 5th year, they take the last 29,200. The accumulated depreciation would be 146,000. So the ending book value is $4,000. This ending book value is also what we would call the net property, plant, and equipment value, or the net asset value. Let's go out here and look at the balance sheet for Amazon. I happen to have it pulled up here. And on page 46, this is their 2020. We can go look at their balance sheet. Page 40. All right, and this is the asset side. Notice the current assets they're reporting is a comparative balance sheet 2018, 2019. And in 2019, you see this line property and equipment net. The hypothetical piece of equipment we're talking about would show up in that line is property and equipment net, comma net. That means net of accumulated depreciation. All right, so if we flop down here into the notes, the notes to the financial statement, in a 10K, they explain everything. And so if we go out here and find property and equipment at cost consisted of the following in millions of dollars. All right, so gross property and equipment. Gross property and equipment would be what they paid for the equipment. And at the end of 2019, it's 39,223. At the end of 2018, it had been 31,740. I'm sorry, those are billions. So it's 31,741,000,000 because all the numbers are in millions of dollars. That was for land and buildings. Equipment, 54,591,000,000, and in 2019, 71,310,000,000. Other assets, and that's other depreciable assets, 2,500,000,000 up to 3,100,000,000. Construction in progress, 6.8 billion, 6 billion, and the end of 2019. Grand total of all the property and equipment at the end of 2019, $119,680,000,000 minus the total accumulated depreciation. Now, the accumulated depreciation, somewhere out there in Amazon land, they have a big ass spreadsheet where all their property, plant, and equipment, they keep track of individual pieces of equipment and stuff. The computer adds it all together, and that's where they're getting this accumulated depreciation number for each year. When you take the gross, that's gross means cost, whatever we paid for it, minus accumulated depreciation, the total property and equipment net, 72,705,000,000, which is up from 61,797,000,000 last year. They're providing this level of detail to tell you where they got the numbers on the balance sheet. All right, so when we look at their balance sheet, property and equipment net, 61,797,000,000 at the end of 2018, 72,705,000,000 at the end of year 2019. Now, one other thing I want to mention, they are reporting some of the detail in here, and again, they have probably a whole lot more detail on their computer. We see land and buildings here. Buildings are depreciated. Land is not, because land doesn't lose value. You don't use that up. But buildings, equipment, construction, stuff, all the other long-term assets are depreciated. By the way, depreciation applies to long-term tangible assets. Amortization refers to the depreciation equivalent of non-tangible assets like patents and things like that. If we go back to the beginning, and I'm just doing a search here for depreciation, what we'll see is that they're going to report depreciation all over the place. And I want to go back up here where Property and equipment are stated at cost less accumulated depreciation and amortization. Okay, so they actually give you some information in here on how they depreciate. Equipment includes assets such as servers and networking equipment, because that's for Amazon Web Services. Heavy equipment, that's robots and other fulfillment equipment. That's the warehousing stuff. Depreciation and amortization is recorded on a straight line basis over the estimated useful life of the assets. Generally, the lesser of 40 years or the remaining life of the underlying building. 3 years for servers, 5 years for networking equipment, 10 years for heavy equipment, and 3 to 7 years for other fulfillment equipment. And we're assuming other fulfillment equipment includes the example we did. All right, so, and then depreciation and amortization expense is classified within the corresponding operating expense categories on our consolidated statement of operations. That's the income statement.